Oh my, oh my, oh my! Ladies and gentlemen, welcome back to the Blackfire Technical Analysis YouTube channel. I am your host with the most, Crypto Bro. We are back at it again with another edition of the daily live stream. Coming at you on this beautiful Thursday evening, early Friday morning. And my allergies are absolutely disgusting today. So I do apologize for any sneezing or any interruptions. It's a rough one. But here we are. Plenty to talk about, plenty to discuss today. If I can get my shit together. Yeah, there's plenty to talk about. Do we have a potential relief rally coming up? Do we potentially have a little bit of a relief rally coming up? We will definitely hop in and discuss. We will be breaking down a couple of 4-hour time frame charts today, just to kind of see what the shorter term time frames may or may not dictate for the daily time frame. And you know, we're going to start with NASDAQ, but what I want to do with NASDAQ right now, for a bro, I'm going to delete this. Before I get started, I want to remind everybody that I trade the 21 exponential moving average strategy, and that entails, that entails a lot of different techniques that I apply to it, but I'm going to explain to you how I do a couple of these things here. Simply put, trading the 21 exponential blindly is like this. You get an open and closure above the 21. That is your warning shot signal. Warning shots have been fired. Warning shots have been fired. You see that secondary open and closure above. That is your confirmation candlestick closure. And what that tells me is that this move above the 21 is real. The probability of it being real increases, so this would be my entry point right here on the secondary open and closure above the 21. And again, upon entry, it's as simple as this. As long as price action remains above the 21 exponential, I remain bullishly biased on the move itself. However long that is determined by the market itself. It's not determined by me. It's not determined by you. It's not determined by anybody but the market itself. And it's very simple. As long as we're above the 21, I'm looking to see an increase on my trade. And quite the opposite also applies. You see an initial breach below the 21 exponential, followed by, you guessed it, a secondary open and closure below the 21. I'm looking for price action to decrease. That is your confirmation signal to sell your longs and open shorts. And if you trade options, it's called something else. I'm familiar with options. I'm just not fluent with options, so I don't feel confident, analyzing from an options perspective. Alongside of that, with the 21 exponential moving average strategy, again, I will repeat it one more time. A secondary open and closure above the 21 tells me get the fuck in and don't pull out until you get a confirmation signal below the 21. And when you get a confirmation signal below the 21, you ride it until you get a confirmation signal back above the 21. And you basically trade the 21. From there, my risk management on initial entry is a little higher. Right? For the most part. Unless you want to wait for a clean retest of the 21, I'm a little more aggressive. in the manner of entering as soon as I get confirmation. As soon as I get confirmation, I'm looking to ride the whole wave to the upside here. But from the candlestick closure, the one that confirms, again, we have our breach here, and then we have a secondary open and closure. I will go down to the 21 exponential. I will take my ruler down to the 21 exponential, and I will manage my risk from this specific point in the 21 exponential, down 1% for the stock market and 2% for the cryptocurrency market. The rules apply to any chart that you look at, as long as that chart is at least somewhat decent. And that's where I'll manage my risk below if I'm in a long position, and then the same but in reverse for the short positions. I will enter on confirmation below the 21 and then go to the 21 above the confirming candlestick closure and drag it up 1% again. If you are shorting, you're looking to put your stop loss in the profit zone, or not the profit zone, the positive zone, the upside zone, because again, with shorting, you are basically trading for price to move down in order to profit. Thank you for letting me know. And I would put my risk management point above that region here. I'm just going to let you know, I'm not going to get too much more in detail other than what I'm going to provide with this NASDAQ chart today, because again, there are a lot more principles that are applied to my overall analysis via the 21 exponential moving average strategy. But technically speaking, if you traded it blindly, you are more likely to be long-term and consistently profitable than not. And again, trading it alone, trading it blindly, can lead you to profits on a consistent basis over time. Again, not financial advice. I'm not a financial advisor. These are my own speculative opinions and views of trading the market. But I digress. For me, and again, while I'm not your financial advisor, it is statistically proven that this strategy has like a 75 to 85% success rate, depending on how you trade it. And again, trading it blindly and managing your risk, for 75% of the time you're getting profit and 25% of the time you're hitting your stop loss, I think is a pretty fucking fair and pretty profitable trading strategy. People have made fortunes off of this moving average strategy. I intend to make fortunes as well as I continue my trading journey. And that's where I'm going to leave it. That's the 21 exponential moving average strategy at its basic core. And again, the psychology behind that is that when we get confirmation above the 21 exponential, the pressure is on to the upside. That is your confirmation that we have a potential move looming and glooming to the upside. And it's the same principle to the downside. When you see opens and closures below the 21, the psychology is that there's pressure being applied to the downside. In confluence with that, in a bull market, trades above the 21 exponential typically last longer than trades below the 21, right? So when you see a bull market and you get a little bit of a divvy below, like this section here on NASDAQ, and then you get, boom, a reversal with a higher low back above the 21 exponential, those trades tend to last a lot longer and tend to be juicier in profits than that of those below the 21 exponential. We have plenty of examples, plenty of confirmed and legitimate examples on this price action chart, again, without any other indicators or any other tools being applied. You have plenty of examples of trades that could have been profitable, trades that may have not been profitable, and not so long trades below the 21 in a bull market. Now over here in current price action, we have 21 fashioned in a bearish posture, right? We are in a bearish market. Again, we do have higher highs, or excuse me, not higher highs. We have the all-time high, and then we have lower highs and lower lows. That is the classic identification of a downtrend here, and once that is confirmed, trades below the 21 exponential tend to last a lot longer than trades, above the 21 exponential. Now that is not, I am not disparaging the tradability of each move in each direction during any specific market cycle. I am not disparaging the fact that they are tradable no matter what. You just have to understand market structure first. You have to understand what is currently going on. Are we in a bullish phase? If we are, then we automatically know trades above the 21 will last for a long time. If you're looking to short, you can, but just know that in a macro bullish structure, statistically speaking, trades tend to last a shorter amount of time below the 21 in a bullish market. And the same principle applies to a bear market. Trades, again, below the 21 tend to last a lot longer than trades above. And we already have fresh examples of this being played out in the market right now. For NASDAQ, very quick trade above the 21 right here. And then boom, now we have a very descending and a lengthy period of time without seeing breaches above the 21. We are trading below the 21. And again, risk management perspective, lots of evidence to support that it's a good risk management point as long as you get a clean entry, that is. Yeah, if you get a clean entry, your risk management could be pretty sound. It could be pretty solid for a while. Again, until you start seeing breaches in the opposite direction. Trading this blindly, ladies and gentlemen. This is what I try to tell people. This is why I want people to study. This is why I want people to focus. If they're serious about the market, if you guys are serious about trading, focus, man. Have the discipline. Sit down. Look at charts for hours and hours and hours. Come up with a strategy. Find a strategy that works best for your schedule or your trading style. Find what works for you. This works for me, and it works amazingly for me. It is a very, very profitable and very low risque type of trading strategy. And maybe I'm a little bitch for trading something that's a little less risque, but I'd rather risk nothing and make a bunch of money than risk a whole lot more, right? Maybe that's the penny pincher side of me, but I take risk management in my positions very, very seriously, ladies and gentlemen. And that, in a nutshell, is the 21 exponential moving average strategy. I did that as a favor tonight for someone that I hope watches the stream like he said he would. Again, I want to be able to provide, an educational basis for how I trade and provide my biases, my opinions, and some plain out, simple, straight up facts. When we do technical analysis here, again, I do apply some of my bias, some of my what I think is going to happen. But at the end of the day, I let the chart do the talking for me. The chart tells me what to do. At the end of the day, I don't tell me what to do. Eyes don't tell me. I'm not the boss. The chart is the boss at the end of the day. And the single sole perspective that I use is the 21 exponential. Sometimes I forget to talk about it in my live streams, but sometimes it doesn't necessarily apply because the sentiment is already here. For example, NASDAQ, well below the 21 exponential. It's kind of implied that I'm looking for downside pressure as a result of simply remaining under the 21 exponential. Not only that, but we are in a downtrending formation. It's not looking good. So now we can start applying some other shit, right? I wanted to do a clean chart for you guys tonight just to give you my perspective. I'm going to give you the major tops and bottoms, and then I'll give you some, other levels to be in consideration of. Obviously, the all-time high. Obviously, the last swing high. Very, very, very specific here. Major lows. Boom. Right there. And then the next major target, which is like right here. Yeah. And then, we have our major levels identified. Now we have our major levels identified, we can start identifying some not so major levels, but still very relevant levels, such as this level here and this level here. We got ourselves a little bit of a liquid zone here, a blue box territory. We're gonna go ahead and fill that bad boy in right here, right now. I don't do fresh charts that often for you guys, and I think I should do that more often, but man. Time in a day that I have is very, 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 very limited. I wish there were more hours in a day. Here's a good level. Here's a good level right here. Boom. And then some very inconsequential levels to be in consideration of as well. That's a blue box territory. Look at that. Nice little liquid zone right here. Oh, and look at that. We got a buy up at the liquid zone. You see, with the liquid zones here. And again, for liquid zones, in my opinion, there's a lot more to them than this, but liquid zones to me are just obvious periods of consolidation, where a breakout or a breakdown occurred afterwards. Quite simply put, we got a big, piece of consolidation right here. Back in time, boom, 11.5 to breakout point at 11.23 in 2020 here. We got, price action coming up, boom, starting to go a little bit sideways here, creating an order block or a liquid zone, whatever you want to call it. I don't give a fuck. The principle is the same as implied here. It's a tight space of consolidation. until broken out or broken down. Once I see that consolidation, I'm looking for a little bit of a blue box territory here. And look at that, price action history plays out once again with NASDAQ as we begin our streaming analysis here. Price action for NASDAQ here falls into that liquid territory, that liquid zone or that blue box territory here, confirms new tentative resistance, but now we're starting to see a little bit of a stop reversal. Actually, this could be a little higher because I do believe we hit support. Yeah, that's a little better. Price action comes into the blue box territory here. Boom, hits a stop, hits a for now, not confirmed, but currently looks like it wants to attempt a little bit of a reversal. Now we could easily get the same sentiment here if we remain below current resistance here at $12,035 here. I'm going to be looking for continuation for price action to potentially shatter its way through 11,845. The next major target below that is obviously somewhere around like 11,125. We do have a couple of levels that I would look for some kind of price action reaction below current the current region here, and this would be a very valid target. 11.5 would be a very valid target, in my opinion, for the downside price action. Again, if we do confirm back below this already confirmed resistance, I would be looking for a push even further down here towards 11.5 to be the first target. But overall, the overall target would be something like 11.125 or 11.130. However, if we do see a closure followed by tomorrow opening and closing above this region, again at 12,050, 12,030 to 12,050, any open and closure above that region here tomorrow, I would look for a push back up towards 12,330, maybe 340, and maybe even to the next blue box territory here towards $12,800. 750, something like that. That one's a little off too. I did do this in a little bit of a rush. And again, it doesn't have to be perfect. Again, there's no right or wrong answer. Close enough is close enough. As long as you get the general sentiment of your analysis, that's all that matters. But any open and closure above current resistance here, again, I would look for a general push. The overall target would be 12,775 here, but I'd be looking for the first target at like 12,348. I want to look at how the 4-hour time frame is shaping up right here. Yeah, we're still below the 4-hour 21 exponential, which is never a good signal. We can always print and confirm, shorter term time frame lower highs, which would initiate that drag all the way down towards, again, the first target 11.5 and then 11.1 would be the general sentiment. We have lows on the 4-hour time frame here, forcing exponential back to a positive slope, but I am not confident. Again, we do have a string of lower highs in this formation and lower lows on the shorter term time frames here, and if we reject the 21 exponential and confirm another shorter term time frame lower high, I'm going to be looking for that push to 11.5 here. Obviously, momentum oscillator speaks volumes, speaks a little differently here. Again, with a fresh cross of the exponential, pushing it further north here. And same thing with stochastics back into the bearish control zone here after a nice forceful cross to the upside. We could see a little bit of a push above the 4-hour 21 exponential here, at which point I would be looking for a little bit of continuation towards 12,330 or 12,340 to the upside. And seeing a secondary open and closure on the 4-hour would definitely be in confluence with seeing a possible push all the way towards 12,785 at the same time, and that just lines up very, very nicely with the daily time frame analysis. At the end of the day, anything can happen with this. If we do see 4-hour closures above the 21, I would look for a push again towards 12,330, and maybe even more so towards like 12,8, something like that. But I'm a daily time frame trader. I'm talking about intermittent moves on the daily time frame candlesticks. The most important thing for me is do we close above resistance today? Whoops. Do we close above resistance today, or do we reject it and see movements back down towards 11.5? That's kind of the sentiment. Daily RSI just peeking its head above the bearish control zone. Again, nothing that's convincing me that this is going to legitimately push its way up. And not price action. RSI has been controlled by the RSI for quite some time here. I'm not looking for anything different until proven otherwise. But again, if we do see a confirmation signal on a breach support with RSI crossing above the exponential, forcing it back to a positive slope, again, I would look for a little bit of a push to the upside. Same thing with stochastics. We are still deep in the bearish critical territory, confirming slightly lower lows. It's not healthy. At the end of the day, my sentiment, my bias still applies. Yeah, we could see a little bit of a relief rally all the way up to the 21 exponential in most case, but I'm not convinced of anything like legitimately a relief rally until we see higher highs at a bare minimum above 13,450. And if we do get that condition, if we do see price action back above 13,450, then I would look for, yep, you guessed it, you know it's coming. You know it's coming, the diagonal trend line of death and destruction. I would look for a tentative test of the death trend line here, maybe all the way up to $14,500. But again, I would still be looking for another lower high. Again, we just confirmed lower lows until I see evidence of a legitimate, true uptrend that signifies true bullish reversal. Again, looking down. And that's not to coincide with possible relief rally right now, but even a relief rally doesn't change my mind on the general direction of the current market status. So yeah, that's going to be the same thing for SPY futures. You know it, hitting this support level, boom, bouncing back up. We did confirm tentative resistance yesterday. This region here is classified as resistance at 39.50. But if we do see a closure above this and confirmation tomorrow, same thing. I would look for a push towards the 21 exponential and potentially looking for a lower high formation. If we do see higher highs above the last confirmed lower high, I would look for, yep, you guessed it, the diagonal trend line of peace and prosperity to be tested once again. But until we breach that, that diagonal trend line and see, major higher highs, I'm looking down. And a sentiment is implied also with price action remaining below the 21. Still doesn't look healthy. A little bit of a divvy up doesn't change my mind. A low call doesn't change my mind. We got low calls all the way back here and still remain bearish. So until proven otherwise, I'm still bearish. Nothing has changed, ladies and gentlemen, except for the possibility again of a little bit of a relief rally. I'm not going to do that one. I want to do the US dollar index because that one's fucking straight ripping to the upside right now, continuing towards the target that was outlined by the 1.272 Fibonacci extension. Boom. We're getting closer and closer to meet that target. Again, I did mention that it wouldn't be necessarily a straight shot one-day candle. Boom, hits that price action target. But I am still looking for that target to be met over time, maybe in the next couple of days. We still see RSI deep in the bullish control territory above the exponential, which is positive at the current moment in time. Although I do have to admit the possibility to see bearish divergence is very much present. Again, if you don't know what bearish divergence is, it's when price action puts in a higher high, but RSI puts in a lower high. Now, we don't have a top confirmed on this price action yet, but if we do get a top confirmed on this price action, we would likely get a bearish divergence arrow, and I would be looking for moves all the way back down to 102.50 first and foremost. Again, if we do get that top call, and again, from a macro perspective, we are still very bullish, ladies and gentlemen. We are still very much above the 21. We are still very much in a very powerful uptrend for the US dollar index. Nothing will change my mind unless I get a significant change of behavior confirmation signal. As long as we're above the 21, I'm looking for more positive price action. However, yes, again, open and closures below the 21, then I would start for the looking for the price action to possibly start moving down towards this region here at $100, 100.70. And maybe even this region here, $99, which would kind of coincide with a possible test of the diagonal trend line of peace and prosperity, which then it gets a little worrisome, right? If we hold it, I'm still bullish. Again, as long as price action not only remains in an uptrending formation, but stays above this diagonal trend line of peace and prosperity, I'm going to remain macro bullish on this structure. My mind would change with open and closures below that diagonal trend line of peace and prosperity. With that comes in confirmation with a closure on very, very, very new lower lows, structural lower lows here below 97.86. That would change my mind on the bullish posturing of this price action right now. Obviously, that doesn't coincide with the short and medium term time frames, because yes, we could initiate a change of behavior below 102 spot 43. That wouldn't tell me that we're automatically bearish. I would be looking for general pullbacks, maybe consolidation for a while, and then possibly confirming a higher low, like a major higher low, a consolidating low, and then seeing price action continue upwards. Again, at the end of the day, that's well and far away. Stochastics coiling in the bearish critical territory, man. I mean, just look at it. It's disgusting. Look at it. Look. Just look with your eyes. That's the kind of power that you want to see on a very, very, very trendy and profitable move here. So yeah, that's the US dollar index. I don't think I'm going to cover too many of the other stocks just because the sentiment is the same on a whole bunch. That's why I like to do the indexes, because a lot of the assets that I do trade coincide with the indexes that they're attached to. If the index is bearish, it's likely that the stock that I'm trading is fucking bearish too. But I do want to cover Apple and AMD and Twitter. And then we'll do Bitcoin, and that'll do it for the stream. Let's go ahead and look at Apple real quick. Lower lows, definitely bearish confirmation. I'm looking for something. I don't know what I'm looking for, but it's weird that we kind of like immediately formulated a range. Like immediately, we did a huge down open, tested up, tested down, closed on a reversal style candlestick. Now, reversal style candlesticks are not indicative of price action direction. Please remember that. However, possibility that this one shoots up also remains. It also remains. However, I don't have any kind of price action signifying that that's possible right now, other than the reversal style candlestick. But I would say any open and closure above 146 spot 21, I would look for the 21 exponential all the way back up here at 155 spot 81. And again, just like NASDAQ, the sentiment remains the same to the downside unless we confirm higher highs above this region here. Confirming higher highs above 165 would actually be like pretty cool. That would be a pretty decisive signal, at least from my perspective, for a major continuation towards the next region. Oh, my wife is in the house. Hi, love. Thank you for dropping a comment on my stream. I appreciate it. I sound nasally as fuck. I would look for continuation with open and closures above the 21 towards the highs, and if we do see higher highs, then we have confirmation of reversal here. This one is definitely structured a little bit differently than NASDAQ itself, but still, we have that. We still have that downtrend. We still have that downtrend. I would look for a test of the downtrending diagonal trend line here towards the upside, and the sentiment will remain the same. Again, bearish until proven otherwise. This would be the change of behavior point. This would be like, all right, we are macro fucking bullish, looking for a big run right here above 178 spot 78. That would convince me, yep, we're looking at reversal. But for now, again, the sentiment is applied to the downside. AMD is another one I'm very interested in, still within this blue box territory, and the sentiment remains exactly the same as yesterday. Any open and closure above the resistance at 90 spot 35, I would look for a test of the resistance above it at 100 spot 95, which is called 101. And then anything that open and closes below current support at 85.25 would lead me to believe that we are going to continue driving down towards the next major target at 73 spot 57. Obviously, that other trend line here, that would be a take profit target from my perspective on a short position at 79 spot 90 here. But I would look for that to get blown through, to be quite honest with you, as you know, the structure is looking kind of weak. I would look for price to move towards this low, the majorest of all major lows as far as this chart is concerned, and this uptrending structure is concerned. It's no longer uptrending, it's definitely downtrending, confirming lower lows left and right. I would look for a continuation drive to the downside if we do reach the bottom side of that blue box territory. Stochastics rejected the neutral territory. That is also never a great signal. RSI here back below the exponential, which tells me rejection, not a good thing either. Bearish sentiments being implied everywhere. Twitter hit the target. Target has been met. We confirmed below the 21 exponential. Saw a nice little pop back up to test it. Just kidding. Hit the mark. Hit that target. Hit it well. I'm going to be looking for this to continue reversing to the downside. I'm going to look for this gap to fill all the way down towards 40 spot 60, 45, 40 spot 75. Give or take a few bucks. not a few bucks, a few cents. But plenty of signals here. Breach of the 50 read on RSI for the first time since March. So that's a signal here that's implying downside pressure. Stochastics here breaching the 50 read as well, but much more significantly, confirming a lower high on RSI structure, which means any divergence? No divergence. No divergence. Excuse me. So yeah, we just confirmed below the 21. Unless we magically reverse back above the 21 exponential and see an open and closure, I'm going to be looking for this target all the way down here, 40.75. Now, if we do confirm that sentiment, that would possibly coincide with the price action closing of the current resistance at 40.67. I would look for another retest of the diagonal trend line of kind of resistance right now, and this horizontal resistance right around 51.65. If and only if we see open and closures above that, that will convince me that we got higher lows right here, and we're going to see this one continue to trend bullishly. Moving on, last one for the night, Bitcoin, and then I'm going to get off of here. Bitcoin, very, very, very similar. Closing on a reversal style candlestick. The target was nearly met all the way down at 24,350. We actually made it to 25,330-ish. And got bought right back up towards resistance, and we're seeing price action currently above resistance here. We do see a low call being flagged out. It's unconfirmed on the RSI structure here, with RSI pointing back towards the exponential in the bearish control zone. And we have our stochastics crossing up in the bearish critical territory right now, pointed up. It could be, again, it could be a relief rally. It could be a relief rally, but it does not change my sentiment on the entire structure itself, which is inherently bearish. Bearish as fuck. So, we could see a pump back up, boom, all the way to 35,000 bucks, 35,100 to be a little bit more exact, which is perfectly aligned with the 21 exponential. But until we see open and closures above that 21 exponential, I'm not looking to trade further than that. However, if we remain below current resistance at 29,500, I'm going to be looking for another stab down towards 24,350, which is another major support level here. Well, it's not that major. I mean, we have a few days of price action in recorded history in this location. Yeah, 1, 2, 3, 4, 5, 6, 7, 8, 9 breakout. So it could just sink. It could just go straight through that towards the bottom. But as I see it right now, again, I do believe it is possible that we see a little bit of a relief rally, but until the structure changes, I'm going to remain bearish on price action. And that's going to do it for the stream tonight, ladies and gentlemen. I hope you guys enjoyed the show. Come check me out. I'm going to be playing some Returnal tonight on my PlayStation 5. Still pretty psyched about that tower. Come check it out. I will be live in like 5 minutes yet again. So come check me out. Come check me out. Just come check it out. It's going to be awesome. Thanks for coming through, ladies and gentlemen. Thanks for supporting the channel. If you're new to the channel and you like what you see, hit that like button, hit that subscribe button, tick that little bell for all the streams and video notifications that we have on our channel. And until next time, everybody, you already know what it is. Stay safe. Stay happy.